Okay, so today we have the Convoy, right?
Yeah.
Convoy Home Loans team, Dustin Rosenberg and Jonathan Yoo. How are you guys?
Good. How are you?
I'm doing great. I'm doing great. Thanks so much for getting on the call, guys. You guys are ranked 6 right now, right? In the
No,
Scotsman guide,
say, yeah, that's correct.
number 6. That's pretty insane. And I noticed that you guys are primarily home purchase, about 63%, at least according to the Scotsman guide.
Correct. I think the biggest thing to take out of it though is that we're like 90% of our biz, maybe 95. We didn't calculate it, which we should have probably. Non-owner occupied financing. So not a
Awesome.
lot of owner occupied stuff.
Awesome. So how'd you guys get your start? That's what everybody wants to know. When they see two guys as successful as you guys, obviously industry thought leaders, they want to know how you guys got your start from like grassroots. Because most people that I talk to, like 95% of mortgage brokers and loan officers, this wasn't their first job, right? It's always like their second job or third job. So what's your guys' story?
I mean, this was my first job right out of college. Yeah. I did tax returns for people during college, and right after college, I was looking for a sales job because I thought, if I don't take the risk now, later on, I'm going to be less likely to take the risk, right? Family, wife, girlfriend, whatever. At the time I was 21. I graduated college. I was like, if I go to bankruptcy now and it takes me 7 years to recover, I'm still under 30, which is young in the business world. So I'm going to go ahead and just jump into sales. I was looking for a job that would pay me an hourly without taking any money back on a draw. And I found a mortgage company down in San Diego. And so I decided to join that mortgage company, and I worked my way up from the bottom tier up to, running the entire, basically the entire company almost with salespeople. And, that's where I met Dustin.
Get there?
Sorry?
How many years did it take you to get there?
I went pretty quick. Luckily, God really blessed me because he let me get up the ranks pretty quick. I was, it was my calling, I think, and I didn't even realize, but, it took me 3 years to get from bottom to the top. And then Dustin was a top loan officer there. And so that's how we met, because we always talked about LA sports. We always talked about LA. I was living in San Diego at the time. Dustin was already in LA with his family. So, we always kept in touch about just LA in general. I used to ask him how to talk about loans and sell loans. And, now an opportunity came up where we were able to kind of set up Convoy up in LA. And he reached out, and we were talking about, joining and starting it together. And that's what happened. That's how we are here today.
Dustin, what about Jonathan made you want to reach out to him? I mean, I'm sure you've worked with hundreds of different people throughout your life. So, this is the guy you called. What made you call him?
Yeah, I mean, well, at our old company, he was the sales manager, and a little bit more about his background is he was actually like the head of credit managing, which is basically our in-house underwriting. And then he moved over to sales. So I knew that like his background of understanding, because in the mortgage industry, you have some LOs that are like really good analytical wise with the guidelines and, all of the underwriting required to get a loan from beginning to finish. Right. Whereas then you got some loan officers that literally just know how to be on the phone. They'll get a guy hooked on them. They'll get him hooked on, just believing that this guy can get the loan closed, but he knows nothing about the guidelines, the loan to value, the seasoning, all of that. And I felt personally that myself was more than capable of being like the sales guy, the guy that's good enough on sales. I didn't need to bring on partner with somebody that was just another loan officer like myself. Right. I wanted somebody that had more of an operational background, but also was behind closed doors or behind the scenes on the operational side of the mortgage, business, which John had. And that was the main reason, to be honest. And obviously having some sort of, other connection than just working for the same company with being friends and from the same town in LA and whatnot makes that gap a little bit easier.
Yeah. No, that's awesome. And I agree. It's really hard because I feel like I'm more of a sales guy. It's very hard for me to find like a client facing COO almost, right? An operations guy who can also be client facing. That's like very, very rare. You know,
Exactly.
yeah, most people like that are introverts and they don't like, you know, they're not comfortable in that space. But obviously, you know, I talked to you guys for like 20 minutes before this interview, and
Yeah.
you know, he's a pretty outgoing guy, which is cool. That's a very specific skill set. Not many people have that skill set. You know, so at the start, how did you guys start out? Did you start out working from home? I have two friends over that started their mortgage company, started it just working from home at first, and then now they're in an office with like 40 people. What about you guys?
Essentially.
Yeah, we worked from home
Yeah.
for the first while we were getting everything set up and filed and getting the company actually legally called Convoy. We were working from home, of course, but I think the first 2 months we had like a 120 square foot office that we shared, and both of us are kind of loud on the phone, so it was a little bit of like,
I've been in that.
for a second, I'm trying to get this done. But then we actually got a pretty big, got lucky because we was in not the middle, but almost the middle of COVID, right? So office space, there was a lot of companies that were
Right.
fortunately dying and needed a sublessor, which we filled and got like a sublease at a very nice location in El Segundo, Los Angeles. And then we just renewed it, and we've been here ever since. And we actually opened up an office in San Diego as well about a year ago, I think now.
Yeah.
So we've got two offices, and just fortunate kind of with how lucky we've been with the timing and the market that we're targeting with like non-owner occupied, clients, and hopefully can just continue.
Yeah, that brings me to my next question. Obviously, these last 12 months have been very difficult for loan officers. I always say, like, hey, you think it's bad for you, think about how bad it probably is for the business owners, because they're the ones who have to pay your bills on top of theirs, right? So, I mean, how's the turn been for you guys?
Honestly, we actually haven't seen that much of a drop off in volume. And in fact, we probably have more volume now than we've had while everyone was trying to go after, the market because it was good. So
What would you attribute that to?
I think Dustin and myself, we're very aggressive in our approach of finding new solutions, because we understand that this is a solution-based market, right? This is a market where you can no longer wait for deals to happen. You almost need to create them out of thin air. And working with realtors, working with clients, word of mouth, and being able to, make deals basically happen that aren't usually deals elsewhere, right? Or wouldn't be deals. That's kind of like how we've stayed afloat and been able to grow while everyone else has been shrinking.
Right. How many employees do you guys have?
I mean, a lot of them, are LOs, and I think total on.
That's a good sign that you have to actually think about it. You're like,
Yeah. I
Yeah.
think it's like 26.
I think it's 27. We just added one.
27.
Yeah.
Okay. Nice. I was talking to Tuan Nguyen, and he was telling me something really interesting about his processing, because he processes way different than most people. He, like normally you just have like one processor who just kind of handles everything. And what he does is he has a whole assembly line. So like he has like 4 processors for like one deal, where they just like kind of like do an assembly line thing. Like, what do you guys see yourself? Like, have you guys put, like, what would be kind of like a unique factor that you would say would separate you from other businesses, right? That's his unique proprietary thing that he does. Do you guys have anything like that you think is a differentiator?
Yeah, I mean, we don't have exactly 4, but for the deals that John and I work on, because we're obviously, originating as well, top originators of the company, while running the company, right? But any client that we begin an application with, you're going to have us, our assistant or our junior, you'll call it. You'll have our credit manager, which is our in-house underwriter, and you'll have the processor. So the steps, it's almost 4. It goes from our junior to us, to our in-house underwriter, to our processor, then back to us at the end. So we do have pretty much every file that goes in with Convoy. You've got 4 people assigned to that file, which everybody's got different kind of responsibilities within Convoy in terms of what they're supposed to do to help the client out. But yeah, a lot of LOs out there, I mean, depending on your pipeline, right? They may be the one and only, which kind of limits obviously how much business you can do, because you can't be our big John and I always complain to each other. You know, our biggest complaint is that there's just not enough time, right? If I could just make the day 27 hours, I would be significantly more productive, right? And yeah, having an assembly line in this industry, I think, is important. But you know, it's hard to do if you're a one-man shop or even a two-man shop. You just got to get to the point where you can scale, and then once you do scale, making sure you're using that economies of scale to your benefit.
Right. And obviously, you know, you guys are doing so well. I imagine you guys have a good hiring process, and I've seen two different approaches. Because I had two friends, and they're new. They just started their brokerages this year. But one of them was like, I'm going to go after the best loan officers and employ them. And the other one was like, I'm going to go after college kids right out of college so I can pay them less money. You know, what would you like? Are you guys somewhere in the middle, or which approach do you think is better?
I think we're in the middle, but our approach is more for they don't necessarily have to be the top loan officer, but at least people with a little bit of experience that have been out there hunting for their own business, because sometimes there's a little bit of skewed aspect with the top loan officer, because some of them are fed leads, right? And all they do is just eat the leads that are given to them every day. And for our purposes, for our business model, it doesn't work as well if you're doing that, because
Expectation.
exactly. And also in this market right now, I think we're going to see a huge shift, especially next year's Scotsman guide, with people originating and actually, like, you know, we're going to see the top shift a little bit, because a lot of people that were originating a lot of volume from just leads they were eating can no longer originate that volume, or that most of them are doing HELOCs for like 90,000, right? You have to do 1 million HELOCs for 90,000 to get the same volume that you were doing previously, right? So we kind of target the people that are not the top producing, but more of the quality that, kind of like Dustin said, have an understanding with how loans work, have an experience closing loans, taking clients from start to finish, because that's very important, right? Every time you pick up the phone and talk to a client, you have to almost, like, you know, sell them is a bad word, but you have to almost encourage them to continue the process, right? It's an encouragement every single time you talk to them, because they're getting blown up by social media. They're getting blown up by other loan officers and other companies. You know, you really have to make sure that they are committed and also going to stay with you the entire way. So we test more for that than, you know, anything else of like, oh, you're a top producing loan officer, because that doesn't matter too much to us, because we want, like, we pay very aggressively. So we want to make sure that everyone is taken care of in that sense, where if they perform, if they're able to perform and are able to kind of understand how to perform, then we'll make sure you're compensated. Not, you know, you have to be a top loan officer to get here. The entitlement factor just doesn't do it for us.
Right. And that also helps get over the kind of uncomfortable to be pushy. It's like, yeah, listen, I don't like being pushy on the phone until somebody started paying me a lot of money. Then I got very comfortable being pushy. Right. And, you know, I talk about this all the time with loan officers. You know, the comment is just like, well, and a lot of new ones are like, hey, that guy said he wasn't interested. It's like, listen, when you go to the mall and you're going to go to American Eagle, you want to buy a pair of jeans, and the sales associate comes up to you and says, can I help you? What do you say to them? You say, no, I'm just looking around. I'm not interested. It's the same thing. It's no different, right? Even if you go to a car dealership, you have an appointment. Even if you have a scheduled appointment, you're like, hey, man, I'm just looking around today. I'm not interested. People are afraid of that commitment. And for some reason, people think that when they get on the phone with a loan officer, it means they have to move tomorrow, right? Yeah. That's not, we know that's not the case, right? So you have to kind of be an artist and kind of like really, really let down, so they can let down their guard, right? It's like, hey, man, you know, and I've even told people to say that before, like, hey, just say exactly what I said and kind of make a joke out of it and say, hey, don't worry. You know, my job is just to get you the information that you need so that when you are ready to move, you have all your ducks in a row, right?
Yeah.
Right. So that's a common thing though. And a lot of new loan officers, they freeze up when they hear that. You know, and they're like, oh, bad lead. It's like, no, nobody would click on an ad about purchasing a home if they weren't thinking about moving for the next 6 months. Like, that doesn't happen. You know?
Yeah, a lot of them are the new ones I've noticed are afraid of just being told no, right? And they kind of freeze under the pressure at that very 1-2 second clip of being told no, that they're like, oh, what I do? And the easiest thing is just hang up, right? That's the easiest thing. But once you get obviously over that hump of just knowing how to actually continue the conversation without sounding like you brought up too car salesman-y, right? We always get kind of docked with, hey, your guy sounds like a car salesman, or I didn't want to work with that LO because he sounds like a car salesman. But being able to just present yourself as more of a advisor, which is a lot of companies kind of call their LOs loan advisors, which I like to call an LO more of an advisor rather than a loan officer. Because your job at the end of the day, it isn't to sell somebody on something, it's to advise them on what is the best option out there, right? Even if it's, staying in their current home or the current loan, it's just advising them on the loan, options rather than a, car salesman. But we see that all the time, especially with our juniors that we bring on. Like they'll get a lead that we set up for them, and they respond 20 seconds later to me and John being like, he's not interested. And we're like, why? It's like, I don't know, he said so. Like, well, did you ask why? Or did you try to have anything other than just he said so? So we see it all the time, and it's just a learning curve that some people are quicker than others at getting over.
Did you guys have a painful transition with your LOs? During the refinance boom, I feel like a lot of LOs got used to being order takers. And that's not how you do home purchase business, right? It's a relationship building business. Did you guys have trouble kind of with the training? Because people were spoiled, man. During the refinance boom, everybody got spoiled and they got used to being order takers. Did you guys have people like that? And how did you kind of shift their mindset to long-term, right? Not immediate satisfaction. You're going to have to build long-term relationships.
Yeah, I mean, obviously what the refinance boom taught us more than anything else is in the residential loan industry, or just residential real estate in general, there's no loyalty in the business, right? Clients will shop you for $1. Clients will shop you for $100, right? So, agents will leave one loan officer for another for no specific reason, right? Just because they didn't feel good, right? That's kind of like the market we're in. So there was that huge shift of mental, I think it was a mental block for a lot of people, where it's like, you have to understand there's no loyalty in this business, right? And in order for you to create loyalty out of an industry where there's no loyalty, you have to be able to make the genuine relationship, right? It has to be more than just the deal. If it's not, like, even if you have to take a loss on the deal, like there's been deals where Dustin and I have done that we've done for $0, right? For no commission, because we were like, no, the relationship with you is much more important than the actual money we're going to make, right? So for us, that's kind of like been our focus. It's always client-based, client-focused, because if the client has a great experience, then more business will come out of that. But if a client doesn't have a good experience, then expect to lose whatever business you were going to get from that client, right? And not saying that every client will love you, every deal is perfect, every deal that we do is perfect. It doesn't happen that way. But there is kind of the general consensus of, okay, this, like, everyone thinks of the home buying process as a brutal process that they don't want to be a part of. They're like dreading it, right? But if you can make it not a dreading situation, if you can make it, hey, it wasn't actually that bad, right? And that's the scale, is you just need to be able to create a situation and an environment that's not that bad, right? Compared to everyone else that is bad. And then you're going to have that person be a little more loyal to you. You do another deal for them. You would advise them on things outside of just, their loan. You can talk to them about, hey, if you were to cash out and do this, potentially you could do that. If you wanted to, let's say they had a kid going to college, you're like, okay, well, if you want your kid to go to college, what might be a good option? Maybe it's not going back to you. Maybe it's going to, a credit union and get a line of credit and be like, hey, here's a credit union near you that you can get a line of credit for. That's probably cheaper than what I can do, right? And it's like, it may be counterintuitive because you're like pushing business away from you. But actually those clients are like, okay, well, he's actually pointing me in the right direction versus everyone else that's pushing me into a bad deal, right? So if you're not pushing people into a bad deal and you actually genuinely have their best interests in mind, and if it comes to the home buying process or whatever, and we believe we have the best product, then yeah, we're going to give them our products. But if we believe that our product is not the best fit for them, then we'll point them in a direction that we feel like is the best product for them and is the best direction for them. And then that changes the mind shift a little bit. It's counterintuitive because LOs want to get paid now. Everyone wants to get paid now.
That's
But
exactly what I was gonna say.
not it. Yeah.
That's what LOs will do is they'll hear that advice and they'll try it one time, and that person didn't give them, 3 deals, or nothing came from it, and they'll be like, oh, well, it doesn't work. It's like, no, you have to compound goodwill, right? If you stay consistent and do it every time, well, then, that's the only time where it's going to bear fruits, right? And I think, everybody, the problem is everybody quits too early. They try something once and it's like, I didn't get immediate results. That's a lot of, I think a lot of people in this industry specifically, at least the people who I deal with sometimes, it's just like, all right, it's almost like a shiny object syndrome. What's the new thing that I can do to make, get it quick, instead of investing in themselves and staying the course and trusting the process. It's very difficult to get people to do that. Obviously, you guys have been able to accomplish that in some way.
Yeah, it's been a short time period too, but it's kind of building as you go, right? Building as you fly, right? There's the analogy. You're building the airplane as it's like flying. So you like trying to dip and fly, right? That's kind of like what you have to do in the industry to, I think, be successful. I mean, we've only been around for 2.5 years or so. So for within that 2.5 year time frame, I mean, we've
half years. Wow.
2.5 years Convoy.
On Scots, okay, because on Scotsman guide it says years 10.
Yeah, that's licensing wise.
But
yeah.
Convoy is 2.
Convoys 2.
Yeah.
That is absolutely incredible.
Yeah.
That's remarkable. Congratulations.
Thank you.
I love seeing entrepreneurs win. So I love that. That's fantastic.
But that's encouragement to everyone listening, because it's, you don't need to be the top, 30-year company, right? We're beating out companies that have been around for 30 plus years, right? Because everyone's kind of antiquated. The business is antiquated, right? So if you're able to kind of build it and fail forward, you're going to fail forward, but make sure you're failing forward, right? And moving forward. As long as you can do that and you're able to kind of pull everything out of this antiquated business, then, you're going to succeed. You'll do well.
Awesome. Well, guys, parting words. If you had one piece of advice to give to a loan officer who wants to be in your position, and you guys have given tons, but if you could only give one, what would it be?
So this will go to loan officers that are, employees. It would be, just don't be afraid and make the jump, because being a broker owner or owning your own mortgage company just provides so much more control that you would have on your end to be able to do the products that you want, the charging that you want. Because a lot of times as an employee, like, you don't get to offer rates that are the lowest available to the client, because your boss might build in on the rate sheet an extra 100 to 250 basis points so that they can make an extra, 100 to 250, but you're out here selling rates that, are half a point higher than what me or John can sell, because we have that control. But obviously the comp, but then just really the flexibility of being an owner as opposed to an employee is night and day in this industry. So just don't be afraid.
And I think that's very important, because that's how we treat all of our loan officers, right? We give them the full control. That's what kind of sets us apart. I mean, there's a lot of other companies that do that on a bigger scale, like Nexa or those guys. They obviously give their LOs full control of comp and, the process. That's kind of like what we do with our LOs too. But the difference between, let's say, Nexa and us is, we are the owners. We actively originate. We're the top originators, right? So Nexa, you're tied to one person that's kind of like a mentor or whatever, giving you coaching calls or whatnot. We are in the ditches doing deals and actively doing these big deals. So, but we give our LOs almost like the same control as if they would be as an owner. So my advice, if you're an employee, going off of him, if you're an employee and you're not happy with the company that you're at because of the rules, find a company. If you're not starting your own brokerage, find a company that's going to be kind of like what we're doing, right? Where you have the flexibility, you have the options to be able to do that. But, don't be afraid to take that step of, kind of taking control of your own situation, because that's the only way to really grow, right? You're always going to be stuck if you do not take the opportunity to grow and really take that risk. And you've taken a bunch of risks. We were talking about it off camera. You know,
Yeah.
we've taken a bunch of risks. When I first started, I put everything that I had to start the company, right? So at that point, I had zero left, and it was that do or die, right? And that's not a bad situation to be in as well, because that really brings out the savage in you. And in the real estate industry, you have to be kind of a savage to be doing well, right? So
I think humans naturally perform best when their backs are against the wall. I truly believe that.
yeah.
Because you have no other choice. You just
Yeah.
don't.
Yeah.
You know? And some of the best things that have happened to me in my life have happened immediately after some of the worst things that have happened to me in my life.
Yeah, absolutely.
So, but anyways, guys, I appreciate you hopping on. It's so cool to talk to guys like you. I mean, I really enjoyed this conversation, and I hope we can keep in touch. Anyways, really appreciate you guys. And I'll be sending you copies of this. We're gonna send it to our social media team, have them clip this up. So hopefully you guys can repurpose this.
Sounds good.
Thanks,
man.
bud.
Thank you guys.